Hi everyone, let's cover my 1 hour time frame Elliott Wave scenarios on Bitcoin and the probabilities at the end of this video. Starting with the bullish scenario where we have a finished 3-wave corrective structure to the downside followed by a 5-wave impulse labeled as a wave A01. After A01, you look for a 3-wave correction in BR2 and then continuation up to at least take out this high here at 110.4k. Naturally, your most bullish scenario is a finished correction and then counting a wave 1, 2 and look for a big wave 3 to the upside, but please also be aware of a potential ABC. An ABC to the upside could be part of a bigger flat, after which you expect continuation, or a bigger sideways WXY and then continuation. Something I do like to highlight is that if we count a finished structure to the downside here, the second leg is very short compared to the first leg. It didn't even touch the 0.618 trend-based fib extension, which is quite uncommon. Now that problem, however, is solved if we would count this as an impulse to the downside, followed by a flat ABC where the low of B touched the 105, which is a target for a flat wave B. You then label this move towards the upside as a wave C. And then, of course, the question is that the end of your B/2, and do you look for impulsive continuation to the downside? Well, in that case, you need to see a motive wave structure to the downside here, either an impulse 1, 2, 3, 4, 5, a diagonal 1, 2, 3, 4, 5 correction continuation, or a multi 1, 2, 1, 2, 1, 2s, and then boom, down. Now, if we check this move towards the downside, we can clearly see this is a 3-wave structure. We cannot count an impulse down here, so that is invalid. A diagonal is too early. Counting this as a wave 1, wave 2, 3, 4, 5, sure, it is still possible as long as you don't take out this high, but a diagonal generally only gets the highest probabilities once you finish like a wave 4 and you move down for your wave 5. So at the moment, it is too early. And counting a multi 1, 2 here would be a 1, 2, 1, 2 down. But of course, by now you took out these highs here, so that is invalidated as well. So therefore, the probabilities at the moment are higher if you would look for this scenario for an unfinished B or 2. You're looking for A01, then a bigger sideways structure in B or 2, and then a move towards the downside. Now this flat is then going to be either your wave W or a wave A. Wave A in a flat ABC or wave W in a sideways WXY. Finishing wave B or 2 at a later stage. Again, the only motive wave possible here at the moment would be a diagonal, but it is too early to call. Then we go to the final scenario, which is once more an impulse to the downside, but then you label this as a wave A, you look for B and then C. So you still look for price to take out 110.4k, but then you look for a wave C to top out, a 5-wave structure in a wave C, and for price to move down and take out the lows. Invalidation is the high at 112k. You also preferably finish a corrective structure after this impulse down after at least the 0.382 fib time taken from the start to the end of your wave A or 1, which with these highs is not the case. So preferably you are not yet finished. If we then look at the news, then we do have some news this week on Tuesday, Wednesday, Thursday, and Friday. Please make sure you trade safe. It can increase the volatility on the chart. And if we look at the probabilities, then from a probability perspective, the probabilities are higher to take out the highs at 110.4k at some point. And then we have to basically take it from there because a continuation of the range is quite plausible. In the bullish scenario, the first scenario that I showed over here, we do have a very short wave C, or if you like to count a double zigzag, wave Y, right? It didn't touch the 0.618. Now the minimum target, absolute minimum target, is taking out the low of wave A, which happened. So it would be a valid structure, right, in that case, but it is not touching the 0.618, which is something we at least have to be aware of, right? Now in the first, or in this particular scenario, you do of course like to see price taking out this high. The invalidation is the low, and you're looking for price to move up in either wave C or a wave 3. Now in the first bearish scenario, as explained, you preferably look for a bigger sideways structure where at a later stage it is common for price to still take out that high. Currently a diagonal has low probabilities because it is quite simply too early. And in the second bearish scenario, you would look for an ABC, and wave C would take out the high at 110.4K. If we then look at the areas of support and resistance, then you can see that initially after the all-time high, price moved down, touched my box over here, acted as support very nicely. And then over here it came down once again into my new blue box, which has been touched. It is, however, interesting that it did not touch the weekly naked point of control nor the daily naked point of control. My box was up here because of the order block we had here as well. So basically price moved down into the order block, but the volume levels just below have not been touched. We also have a point of control, by the way, just here at 107.2K. So that is interesting, at least something to keep in mind. So for now, the box will remain blue. And to the upside, resistance around 110.9, and then over here 111.7/8K. So those are areas to at least keep in mind. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.